Hello, good evening. I am Juan Luis Riquelme, speaking the stock Citi Group Incorporated for you. Today, this stock ranged between 63.35 and 64.80 in the New York Stock Exchange. It's maybe a good opportunity in case someone has an analysis and wants to buy this share. Remember that this is not a recommendation of buying shares, just a help with this educative video. And it's interesting to see that this stock has decreased in 1 month, 10% in the year has been in a very much lower value. For example, in March 1, 2020 was in 40 and something, and still about October was in for $41. Then may take long, and remember that the stocks related with banks, they may either fall, but could be interesting that without because of the measures from the Federal Reserve, maybe the banks will earn money with the interest rates higher in 2022. Probably if someone will be interested in buying at about 62 tomorrow Wednesday, could be a good idea. Buy few and don't expend much money, and could be more convenient. Expect a lower decrease of at least 10% or 20%, because we are still in pandemics season and may decrease importantly. The price to earnings ratio is 6.03. That is better than the average near to 10 from the industry. And the target price is about, here it says 84.96. The friends from Simply Wall Street, they say that is about $86, meaning that is, they say is 55 undervalued. I calculated more because today the final price was about 63. One thing that maybe is important to mention is that some analysts are expecting a decrease in the future growth of 15.5 for several years. That is not very good, but the bank is taking some measures to try to gain more. For example, we may see here in Yahoo Finance that the bank has hired 100 people for a crypto unit to increase income. We'll check some information in statistics. They have a price to book ratio of 0.71. That again, it shows that the stock is undervalued. The profits are very interesting of 30.63. Excuse me for the noisy environment, but in pandemics is where we work. The 30.63 profit margin means that from every dollar of sales, there is 30 cents of profit. That is very good. Return on assets is 1.01%. The return on equity is 11.69%. It's not impressive, but it's just something weak. Another interesting thing that may see here is the payout ratio of 19.86%. 32%. That is very safe. It means that they are not expending too much money, putting in an unsafe condition to the company paying dividends. Here is not indicated the current ratio, but is about 0.9%, as we may see here. We have 1 trillion of short-term assets and 1.8 trillion of current liabilities, meaning that is about 0 point something 0.6 is not good, because it's indicating that the company has about 0.7 cents to pay every dollar of short-term debts, and could have, if not improving, some problems to pay to the suppliers. In management, it's interesting to verify that they are in the insiders section. There are not risky information. Several not big transactions of selling of shares, because 27,000 and 53,000 in comparison with how we will see here in Yahoo Finance, 2,000 billion shares is something that we should not worry about. You may go to the balance sheet section, and here we will see that there are in 2020 2,000 million shares. Then we don't have dilution of shares. Why the dilution? The dilution is important. Here they are. We may see that probably are repurchasing, because they started in 2017 with 2.5, then 2.3, 2.1, and 2 is a decrease of 20% of shares. That is very good, because it means that there are less shares, and for that reason the shareholder will participate in 20% more proportion of the future earnings from the company. That is very really satisfactory to see. Another thing that we could see here is that the comment that Simply Wall Street informs in this section is consistent with what we have seen in Yahoo Finance. Here it says, dilution of shares. Shareholders have not been meaningfully diluted in the past year. Excuse me, an aircraft passing now in this exact moment. Finally, we will see again, because tomorrow maybe someone will be interested in check again the prices. Probably if you have your own analysis, and if you like this share and want to go for one share, keep in mind that in pandemics the shares may fall. Then if I were you, I would buy at 62, and then I would wait and I would observe what will happen. For example, if the new decrease could be at 10% or 25% lower, then probably it's a good idea go for a share at 62, and then for another share for probably we may see that easily may fall to 57, or even arrive to the 42 that was in for about 7 months. Well, okay, I hope that this was interesting for you, and I wish you luck if you participate in the market tomorrow. Bye bye.